Joining me right now is Global X Fund Senior Vice President, Head of Research and Strategy, Jay Jacobs. Jay, it's good to see you. Thanks so much for joining us.
Thanks for having me.
So really, the year started on a better tone, of course, than the way it ended. What kind of a tone are you seeing in terms of investors right now? How are the flows?
People are defensive right now, but they're starting to get more confidence. So where you see that is maybe a little bit of a movement out of bonds into what we call kind of quality stocks, the stocks that are, household names with low debt, high profitability. Think of Clorox, Procter & Gamble, Pfizer. These are well-known names that people feel comfortable investing in right now because they're not going anywhere, but they have a much better chance of kind of surviving more volatility in the near term.
Is the big worry China? I mean, yesterday when we saw that China economic data, that was the underpinning rattle for the market. And now we're wondering who's next. A number of companies have already talked about the weakness out of China having impacted their numbers, like an Apple. Do you think this is going to continue on certain companies?
I think China is going to be mentioned in so many different earnings releases this quarter because China's been the growth engine for a lot of U.S. companies for the last decade. As the U.S. economy has really matured, China was the high growth engine. And so if they're no longer selling into China, that's going to be a big issue for future earnings.
So how do you feel this year about markets and putting money to work?
So I think we have a bit more positive tone than the overall market. I think that valuations have really come down so much that they're starting to look attractive again. But there's a lot of questions out there. Is the global economy going to grow at a solid speed? Are we going to see less geopolitical tension? I think if we can answer some of those questions, it could be a very nice year for the markets.
And, of course, then the Fed is also a major component here. And they've told us they're on pause right now.
Yeah, I mean, a lot of people are still expecting, anywhere from 0 hikes to 2 hikes this year. But, the Fed needs to think about employment and inflation. And right now, employment is still very strong. It's less than 4%. Inflation's coming in pretty stable. So it doesn't seem like there should be a lot of tweaking to the Fed right now. I think they're probably in a pretty comfortable space.
We've got the numbers on the screen. Earnings are in focus. United Health Group just reporting earnings moments ago. Better than expected numbers here. Earnings per share coming in at $3.28 a share. Revenue, as you can see, $58.42 billion. JP Morgan, of course, the big stock to watch today. The bank reporting later this morning with an expected earnings per share of $2.20, revenue of $26.83 billion. And then there's Bank of America, Goldman Sachs, Morgan Stanley, also reporting this week. Want to get your take on the financials. Last week I spoke with JP Morgan Chairman and CEO Jamie Dimon. Here's what he said about the markets today. When you look at all asset classes having declined, whether it's stocks, bonds, you've got energy, and even as the Federal Reserve is raising interest rates, you've got the 10-year going lower, and then you have the inversion of the 2 and the 5-year. Yeah. Do these things not worry you?
Not a lot, because I think that sometimes sort of asset price, I'm doing stocks, but I say the same thing for other asset prices too. The world, if stocks in America are at 18.5 times PE, and now they're at 16. Sometimes there's a good reason for that. Slower growth is a good reason. People do have concerns about rising rates. They do have concerns about trade. I think trade has caused a lot of volatility in the marketplace.
He was pretty much positive overall, even though we're looking at this market uncertainty. What's your reaction?
So financials play a super important role in this earnings season because they're global in nature and they have a really strong pulse on what's happening in the global economy because of the loans they're making, because of the IPO pipelines, because of debt issuances. So it's obviously a good thing to see the CEO of one of the largest banks in the world being pretty positive. But I do want to see kind of the full financial sector and see what those results look like. There's some aspects of banking that should be doing really well right now. The volatility should do, pretty well for trading. But I'd be very curious to see what the investment banking forecast look like for 2019. Is the IPO market going to dry up? Is debt issuance going to dry up? Because that's a much bigger kind of indicator of how the global economy is looking.
That's a good point because there was no high-yield debt issuance at all in the month of December. We have a pretty good IPO calendar for 2019, but we'll see. Companies don't necessarily have to go out and complete that if the markets are not strong. So let's talk fintech for a moment. That's been sort of the buzzword within financials. Where are you seeing the most support from investors? Big banks, smaller banks, fintech, what?
Fintech has been huge, especially in 2018. The mobile payment space was kind of a very fast-growing area because, think about going to a coffee shop these days. You can pay for a coffee with a credit card, with a gift card. Even some coffee shops are taking cryptocurrencies.
Yeah,
so something that unifies all those payments into a simple system is becoming very valuable to everyone from small business owners to some of the largest corporations in the world.
Jay, it's good to have you this morning.
Thank you.
Thanks so much. Jay Jacobs, Global X there.